Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode features a different topic and a guest who shares their experience and knowledge with us. Tune in and learn something new with BankTalk podcast.
Hi, everyone. Welcome to BankTalk. This is Rich Carty, Sales Executive with Remedy Consulting. We're excited for our next episode where we will have Jesse Schwamb join us from Members First Federal Credit Union out of Pennsylvania. We'll talk a little bit about his role there and the growth and tools and some analytics that have been pretty productive for them as they continue to grow. Looking forward to having you join us today, and we'll get going from there. Hi, Jesse. Thanks for joining us today on BankTalk.
It's great to be with you, Rich.
Well, why don't you tell us a little bit about yourself to kind of kick off?
Well, it's great to join you. I always love listening to BankTalk. I'm looking forward to our conversation together today. And I think I have a lot in common with many of your listeners. I started my career with a large regional bank. And when I started, I had this great privilege to straddle two sides of the operations. One was the retail banking side, and the other side was financial advisory services. And there's so many great stories I could tell being in both of those roles, but being a young person coming into an industry that I had a great interest in, being in those roles taught me at least two things. One was that really when it comes to thinking about financial intermediation, we always connect that directly with money, our needs for money, what our customers and our clients and our members need. But really, it's less about that. And I understand early on that money was just this intermediated layer of our lives. And we were only concerned with it because it was tightly coupled with something else, a goal, an objective, some of the standard we wanted to achieve in life or for our families. So I learned early on, that's really what people were after. And they often struggled to connect how the institution could help them achieve that goal by way of the resources that they had. And the second thing that really fascinated me was there was all of this behavioral and cognitive bias in decision-making when it came to managing money. And that's why there needed to be this kind of coming together, this intermediary to help and to guide people into proper decision-making, either to help remediate behavioral biases or to navigate through the more intractable cognitive ones. And so it seemed to me early on that this is a great noble purpose. Banking is an amazing industry, an amazing function in life. It's a skill of life, actually. And so when I discovered that, I knew I wanted to be a part of that process. And so starting there and getting that experience in the front lines eventually led me to where I am now at Members First, helping to lead our financial planning and analysis division, which really is concerned with that very thing, which is making this role of financial intermediation more practical, more useful, more trustworthy, more engaging and oriented toward everybody who needs to use finance, and that is all the people. Members First is a federal credit union in South Central Pennsylvania. It's nearly $8 billion in assets, and it serves communities across the mid portion of that state there with nearly 60 branches. So this led me on this journey of really understanding that this is an incredible purpose to be part of bringing savers and borrowers together to meet their needs in mutually beneficial ways.
Awesome. We appreciate the background. And obviously, as an avid listener, like you've told me, we're happy to have you on and kind of be on the other side of it, where some of our listeners might get that chance if there's a topic they like. And I think when I had heard you actually on another podcast, but talk through, your role and so forth, major at University of New Hampshire, which I know you have roots to as well, but it definitely kind of, I thought it would make a great episode, which I'm excited for here, and kind of hearing your perspective and your background. It definitely, put the light on for me.
Right. Yeah, I appreciate this opportunity. I think that there's many out there, we take for granted the ubiquity of financial institutions, but they really serve a purpose that carries like an ancient pedigree. Like we know, for instance, the Mesopotamians charged interest on loans before they discovered how to put wheels on carts. And so there's this idea that there's something about this that engenders value. And I was immediately captivated by this idea that finance has helped society writ large at the macro level, but it's just maybe even more useful at the micro level. So it's really helping people meet needs in some way in their lives, whether it's borrowing or saving to achieve a particular objective. So part of my own career has been centered around this idea that because it's a skill of life, that you have to interact with it, and that really we have some sense about us that those who interact well with finance tend to do better. And as a result of that, we think about like the things in our lives where we really need a good outside perspective, somebody we can vouchsafe trust to who will guide us. I always think in life you want a really good mechanic, you want a really good doctor, and I think you want a really good banker. And that's partly because we recognize those areas of are critically important, but they require a knowledge set that sometimes either we don't have a turn of mind for or don't really want to concern ourselves with, but we have this idea that wouldn't it be great if I could have a second brain, as it were, somebody else outside of me who's maybe as close to me but isn't me, that can help guide me and lead me in those things. And that's why I think everybody in life needs a good banker.
I love that metaphor. I think it makes a lot of sense, and it's true. It's nice to have someone to rely on for those certain areas, and on the you can trust and go to with those questions or needs or whatever it may be. So I love that. Talk to me a little bit more about Member First's story with how the kind of how it shaped your role and how obviously the growth to 8 billion. What does that look like in terms of successes, challenges, and just kind of how you're there?
Absolutely. Members First is a fantastic organization. It's a credit union by nature, and its ethos, it really embodies this idea of a cooperative as people helping people. That's present in the way we think, it's present in the way we act, and it's present in our capital structure. We're member owned. And so that's one of the things that really drew me from banking into the credit union space. This idea that there's something to be in it together and that wealth is something that is acquired together, this idea of being better together. So when I joined the credit union in 2006, it was just a little over 1 billion. And as I said, we're just reaching rapidly that $8 billion mark. And all of that growth has really come about by this function that we're talking about, whereas what is the need of the membership? So if this is an ancient business, which it certainly is, standing in the midst of borrowers and savers, what is novel and new is how that gets recapitulated or re-explored or reimagined as technology moves forward, as needs change. So often when I think of what the credit union does, I imagine the past and the present as two countries separated by a river. And to me, financial intermediation is that intertemporal bridge that joins them together, connects the present and the future. So by acts of borrowing and lending, saving and investing, we're shifting our expenditures across time. And interest is just the toll levied on that bridge. It's what borrowers pay for bringing forward their consumption, and it's the fee that savers earn for moving their consumption into the future. So the credit union's job is really to navigate the traffic on that bridge in our communities, to help both parties go back and forth across that bridge in ways that help them accomplish their goals. So all of our growth has really come from that purpose. And what we really tried to do is put ourselves in a place where we become more human by the use of technology. We become more empathetic, compassionate, and relevant in financial transactions. So we're looking at how people want to use that bridge. And if we can discern that, what we've done over time is say, well, we want to be present then, let's say, of indirect lending process for vehicle loans, because we know that most people's heads when they're going to buy a vehicle, if they're excited about that prospect, and that could be a big if, but if they're excited about that prospect, their head doesn't pop off the pillow in the morning thinking, I'm so excited to get a new account today. What they're after is the vehicle, but we want to make that as painless as possible for them to engage in good borrowing, have a good financial institution that is the bulwark underneath that process of purchasing the car. The same is true for any kind of other title secured or asset secured loan. We want to make sure that the products and services that we offer are really hitting on a need and not just features centered around some type of esoteric thing that's out there. So it's not finance just to be finance. It's finance for the sake of really serving members. And really that's where all of our growth has come from, is being present in our communities, building a strong network effect through our branch structure, and then leveraging that branch structure to say, we want to be present not just where you see us on the corner or in the grocery store. We want to be present in the transaction you're about to undertake, whether that's, again, in person at a dealership, whether that's as you're getting your first mortgage, or whether it's online or on your phone. If we're there and we're relevant and there are low barriers to use us, then we know that we're going to be able to serve everybody well, and the growth will come as a result of that.
Awesome. In terms of like the actual, I guess, marketing perspective, is there one that's kind of shown through and been more useful, or maybe that's kind of had that better connection for, for Members First?
all of our associates, our over 1,200 associates, all of them are required throughout the year to participate in all kinds of events on behalf of the credit union. So that's donating their time, being a part of community fairs, going and serving their neighbors. A big part of who we are is just being present. And what we find is that when you do good work, when you're present in your community, people want to be a part of that process.
Yep.
It's both a vibe that's represented in people, and it's changed lives, change lives. And so by having our members be part of the communities where they live and serving in that way, representing, that's a huge part of it. Of course, we do a lot of the same things that lots of other institutions do, that is building brand awareness, whether that's marketing in a very visible sense, billboards, distribution, mailing. All of those things are part of who we are, but the center of who we are is just being present and getting out. So we firmly believe that it's the nature of healthy things to grow. And when you can communicate a strong value proposition, especially manifest in examples in people's lives, then we find that those stories are going to carry forward. They're going to draw other people into the experience. So a lot of the technology we have today, whether that's social media, our online presence, anywhere we can continue to tell those stories. There's quite, if you go and check out our social media, you'll find all kinds of interesting things. We're showcasing our members because we're really the center of who we are, who we want to be about. And so because of that, we find those stories communicate exactly who we are, then we're going to continue to receive growth as a result of those strategies.
I like that. Yeah, it's definitely a great perspective to have the team attend, like you said, half the events and using the other forums as well. Well, let's shift gears a little bit. Why don't we talk about on your side a little bit more on the technology? And I know when we talked previously, we talked about a homegrown type platform. If you don't mind kind of sharing that side of the house, that'd be great as well.
Sure. Well, like I said, what we're really concerned about is always trying to move our thinking from first principles to that second level. So there's so much data these days, we'd be exhausted by data. And I think the real goal, again, is if it's true that, again, money is this intermediated layer of our lives, then it means that we can read something about the interaction that our customers, our members, our clients are having with the institution. And then from that first level, discern then what are the behaviors that are really driving that? What is the first order there? And then how do we use that to make their lives easier, to be more present, to be more helpful? So for our institution, what that's meant is over time, we started with very, very simple data warehousing, just collecting part and parcel pieces of information. Over time, it's just grown and allowing then our associates access to that information to perform all kinds of different analyses. And then, of course, as things have changed, we layer on top of that Microsoft Power BI, we've used SQL querying, we've used Access at some points. All these things really just bring us into a place where can we take what is data and turn it into information? So we're a bit maniacal about this because we know that the end goal shouldn't just be, again, rote data, but what does it say about how people are using the credit union? And what is that then can we infer from that about how we can do better? So these are just really simple processes that we've done. And we've used that then to create our own models of all kinds, either in forecasting or in inferential statistics. But really the simple first layer of that is getting our hands on some data and then combing through that data and creating hypotheses about what do we think this is saying about the world, and then testing that in some way, and then using that to inform judgments and make decisions.
Well, thanks, Jesse, for that part. And I think for other groups, or even looking back on your experience, how long did it take to get up and running? I'm sure you're always maybe tweaking or changing those systems, but what's that generally look like from your side of it?
There's no doubt it's been a process of growth, which has moved through time. I think it started for us with really just getting a copy of some simple data points from our core system into some kind of database structure that we could query. And honestly, I don't think that took too long to stand up. We have a remarkable IT team that assisted us with that. So probably that process was just over a couple of years, probably less than that, to be honest.
Okay.
And then from there, it's just iterated. So it's grown a little bit more. We've said, can we pull more things in? And as we've gotten more systems, we've always asked the question going in, how can this connect with what we already have? Are we keeping a keen eye toward how we can use this when we implement it so that we're going to be able to use the data? In fact, even now, part of our acquisition process when working with vendors is always to ask that very question. We know that many of the tools vendors have, they allow you to query their data in their own environment. But we're always interested, at least if we're only curious, to ask, what if we want to bring that in? Because it seems to me that some of the value of these data systems is just amalgamating disparate sources. And if you can do that, that's maybe 90% of the battle. because it means you get like a clear clarion view of everything all at once, and you can be integrative in your approach. So what started as relatively a simple process has just evolved over time. And I say that would be my encouragement, is to start somewhere. I think there's that saying, when's the best time to plant a tree? And the answer is 50 years ago or today. And so if you can just start with something, and even if that's getting kind of some basic data exports, setting them aside, but working on some kind of organized infrastructure, a little bit goes a long way. And all we've done is just add to that over time.
Interesting. When you talk about the core, that technology vendor that you're working through, just out of curiosity, have you guys been with the same core since you've started, and that's kind of filtered over, each, I guess, contract or year, or have you brought in any new ones, and has there been challenges with that, I guess?
We've been with the same core since 2006. Right before that, though, relatively close to that mark, we had made a shift. So that was the last big change.
Okay.
But through that time, especially as like the fintech space has expanded, we've been very deliberate at adding in a pinpoint way, almost surgically, as it were, different vendors that we want to work with that will integrate with that core. So we're always trying to make sure that we're being as efficient and responsible as possible
Sure.
with both the data and the connectivity of the pieces. Our goal is always to make sure that we want to go out and get the biggest value that we can. So when we discern that we want to keep, let's say, our knitting close, our central purposes close to us, our strategy and our objectives, then what we want to do is add a partner that we believe is going to engender more value from the outside. Again, almost like a second brain for us,
Yeah.
rather than us trying to recreate something. So we're always looking for that kind of synergy. And part of that synergy then is integration of the information so that we can use that in a really profound way. Beyond just, for instance, having an LOS, which does origination fantastically, that's great. But how can we make sure that we're using that treasure trove of all the exhaust created, all that data created from that, to inform other decision-making across the credit union? Because it's possible that by linking that origination information, not just in a lifetime way from application to paying off the loan or for charge off or delinquency, but in addition, what can that tell us then about what's happening with the deposit base as well? Or how are those members who are applying, what does their deposit profile look like? But again, that helps us understand how they're using, in my analogy, that bridge between the present and the future. And we want to help that traffic and understand them best.
Awesome. I guess, maybe for a different financial institution that might be listening, or if you were talking to someone in your circles that isn't 8 billion and maybe doesn't have those growth ambitions from 1 to 8, in that short time. But for a smaller group that, wants to maybe put something into place, or with a more of a start simple type approach, any recommendations, or how would they go about that?
I'm grateful that when I began, the credit union didn't really have a lot of these tools writ large. And in many ways, our credit union had very humble beginnings. It was just a handful of people putting in $5 to help one another to make loans for appliances. And so we carry that humility with us. And so I think actually the tools sometimes can lead us into a false sense, well, if I don't have these tools, how can I provide this really deep, profound analysis? What I'm encouraged by is that so much can be done with so little. So one of the things I always think about is I think the best way to bring really good analytics to any environment is to start simply with some sense of descriptive statistics. So let's say, for instance, even pulling down, let's say, all of your members or clients or customers sitting in a money market account and just stratifying those by balance and by balance tiers. And then maybe you're getting a sense then for the profile, the distribution of those funds. And then you may be thinking, well, maybe I can add how many of those within each bucket have a checking account, or what is their ages? Bringing all of that information just together, what I found is it changes how we think, because it concerns us with the way things really are and not as they appear to be. There's so much anecdotal or apocryphal evidence that's brought about in our conversations often. And that's good because it relates to experience or maybe small sample size interactions. But just bringing a little bit of information together and then turning that over constantly, looking at medians and averages and distributions, and bring in structure of different attributes of it, whether it's age or age of account, or where is the balance growth coming from. Those are so illustrative. I think they really start to change and inform our judgments. The second thing I would say is that there's so much great data available on the balance sheet and the income statement, but they rarely get synthesized in a way that brings additional or add-on meaning. So what I think about is we think about our power generating earnings of the institution measured predominantly in things like ROA or ROE. just decomposing those, most famously using something like the DuPont method to decompose those. So you get principal component attribution. Where is the earnings power coming from? Is it from your profitability on revenue? Is it from efficiency of assets? Just taking those calculations can be done just from a balance sheet and income statement. It can be done from the 5300, and then tracking that over time to see how things are changing in the organization. Those I found have been very powerful at shaping approaches and unearthing strategy. It's one thing to say we want to run efficiently. It's another thing to see that actually vetted out in your numbers. So what I find is using things like return on invested capital or looking again at the decomposition of ROA or ROE really gives us a sense for how the institution is using its leverage, how it's using its earnings. And there's lots of ways you can go about this and lots of decompositions. We use one, in fact, that at the center is our net interest margin. And what we can do is basically we have a couple measures that we add or multiply together, and that gives us ROA. It helps us to see how are we building our ROA. And then what we do in addition to that is when we create a budget, we actually create a free flow chart which shows how each of those measures are doing actual versus the budget. So we might have thought that we'd be more efficient, or maybe our ROA is outperforming the budget, which is great, but why is it outperforming the budget? And so all of these just provide so much clear insight, like it's having an MRI for the profitability of the business. And the great benefit is it's really relatively simple to put together.
Well, that's great. I appreciate that perspective from everything you've seen and so forth. As we record this heading into 2025, are there any, what are you guys focused on maybe, or things that you're seeing and maybe strategies as, you head into that new year, 2025?
We're increasingly focused on making sure that we push out on the edges of what it means to have financial well-being. So part of that for us is we're looking at expanding our product set to include some things that maybe often haven't been traditionally included in banking, and those are yet to come. Beyond that, what we really want to do is continue to grow our deposit base, probably in a way that's just above GDP. We're looking to continue to expand in our footprint to just reach more people that we know could use these kinds of financial products and services, to being brought into that cooperative model. So we're going to continue to expand the network in terms of branches. We're going to continue to make sure that we tear down all these pain points for people to interact with the financial system using us in a way that's productive for them, that is easy and straightforward and resonant. But at the same time, we're going to do that in a way that builds intergenerational equity. We know that we're vouchsafed with responsibility to be delegated monitors of the loans that we make, and then, of course, to safeguard the assets of our members for whose deposits are with us. And so, by virtue of that fact, no matter what's going on in the world, we always have this eye toward building that intergenerational equity. We want to be around. We're about to celebrate 75 years. We want to be around for another 175 years. And so to do that starts with thinking about it today as well. So in the short term, we're always looking to grow that membership base, not merely because of growth, but because we know we have yet so much more to offer. And the credit unions in particular can come into these spaces, I think, and really engender specific value, because we're very, very concerned about that ancient business of financial intermediation where everybody gets something in return. And so we're going to develop products and services that continue to suit and fit into people's needs. So whether that's changes in payment structures and payment systems, ability to interact better with our online applications and our web interfaces, or again, just being present in the community so that when times arise, when we need to invoke the life skill of finance, there's somebody to go to, and you can go to us in the way that you prefer. And that might be the phone call, it might be chat, or it might be sitting down with somebody, because sometimes we need to do that. It strikes me that we often require wisdom in navigating prices in life, whether that's like house, cars, insurance, even just knowing, like if you were trying to sell your car or you're trying to go to get a trade done, you go to a third-party exogenous source. You go to Kelley Blue Book and say, give me the model, give me the Paragon, give me the touchstone for what this thing is worth. How do I know that the value is resolute and firm and reliable? And we're going to do that too. And in this year, that's basically who we want to continue to be, is to be present and to push out on the boundaries of what it means to promote financial well-being and health.
That's great. No, right back to your metaphor. You need your doctor, your mechanic, and your banker that you can get to for all the answers. That's great. Out of curiosity, I figured to bring up, post-election, anything else you're kind of considering within your strategies for next year or something to,
They say that you live in interesting times, right? And it
yeah.
seems like we certainly do. There's no short of interest in the times in which we live. And so one of the things that we have in mind is that sometimes the more things change, the more things stay the same. I think it was the great writer Malcolm Muggeridge who said there's no new news, there's just old news happening to new people. And in the same way, there's should be a long view, I think, on the types of financial information we're talking about here. So in many ways, nothing's going to change for us. We continue to do the same things. But in other ways, of course, we know that we're going into a lower interest rate cycle, that the politics may have some influence on that. And so we're just keeping our eye on all the things that we know that we do well, which is our goal is to create a sufficient stable margin along a trend. And so we know that as rates rise or fall, really our job, what we're supposed to do, what my team is concerned with, is ensuring that we preserve that margin because we're engendering value on both sides of the balance sheet. So in my view, I think we're going to continue to do that. And of course, there may be some short vicissitudes and changes in that process as a result of these things. But we recognize as bankers that this is exactly where we earn our keep. This is the playoffs, as it were. So when there are times like this where there is a lot of uncertainty, what we want to do is one, hopefully, as we've done, we've been preparing for that uncertainty in advance. So we've been thinking about things about our capital position and our liquidity, because we know for certain the only thing that will change is that there will be change, and that what was once a rising interest rate environment will at some point be a falling interest rate environment. And so we're creating that wherewithal ahead of time so that we can meet the demands and the unique needs that arise temporarily as the cycle continues to fluctuate. So in many ways, I have a really boring answer, I guess, Rich, which is we're going to stay the course and continue doing what we're doing. But that also means that we've been thinking about these changes for quite some time. We've been planning into them for quite some time. And so for us, that meant increasing our liquidity, increasing our net worth position so that we were ready for whatever was going to happen. And we're ready and nimble to make changes in pricing because we know that people have different pricing needs. And so as the economy unfolds and market rates change, we want to be nimble in that, because being nimble means that we're being consistent and thoughtful with the users of capital and with those who are providing it. And so we're just going to continue to take our cues from the market, having already prepared and knowing that we'll need to look for those cues.
Awesome. Appreciate the answer there. Well, Jesse, is there anything you maybe wanted to bring up or anything maybe I didn't ask, whether it's future looking or just kind of in general with Members First that, might be interesting as well before we wrap it up?
Well, I'm always grateful for these types of conversations. It's great because it's like-minded people coming together and being excited about what financial intermediation provides to communities, to society, to civilization, and to individuals. And whenever I think about that kind of thing, and really I think it can seem like oftentimes, I am a giant financial nerd. I'm happy to admit this. And so I love a good complicated model. I love getting my hands in all of these complex and detailed formulas and equations and understanding leverage ratios. All that good stuff is great. But at the end of the day, it's all for naught if it's totally disconnected from the service, those who are actually using this system. And I think of Members First in particular, I have good friends who many years ago were adopting two young children with special needs, in fact, from China. And as they were nearing the end of that process, and it was a multi-year process, it was rather difficult at times and very frustrating. They came to the end, and as they were sorting out the final application dues and the fees, the government had said to them, as part of that final process, there's some things that you need to pay for in cash, and we would like that cash to be in sequential bills. And this is not uncommon. It's just part of the business of that transaction. It's all part of the normal application and adoption process.
Okay.
And so I remember that they were very much beside themselves because they didn't even know how to do that. And they thought, it sounds so strange. Who can I ask about that? Who can I go to? And of course, there were Members First. And they went into the branch. They stood in line nervously to wait to see the teller. And they came up and the teller said politely, of course, what can I do for you today? And they tried to explain this rather sheepishly, what they were doing, because it sounded so strange. And the person behind the counter said, this is no problem. We can do this for you. We want to do this for you. I'm going to put in a special order for you today. We'll get the money in and we'll help you. Now, that seems like a small thing,
Yeah.
but for these people, when they think of members first, they don't just think of like a bank, they don't think of the drive-through, the hours of the ATM. They think of somebody who helped them bring their children home to them. And really, that is the power of what we're talking about here. So as long as we can use data and metrics, these simple things, these tools to bring all of that about, we're making the world a better place, Rich. And as far as I can tell, we're living the dream.
Yeah, it sounds like a pretty powerful, obviously, story, but a relationship that's been created and obviously has been working well for Members First. So, no, that's awesome. Thank you for sharing that. Jesse, unless there's anything else, again, I'm grateful for you joining us. I really appreciate you spending some time with us today. Anything else?
I'm thankful for the invitation and would love to connect with more listeners and continue the conversation elsewhere. Thanks for having me.
All right. Jesse, thanks so much for that. Thank you to our listeners today. And again, Jesse's an avid listener, so it's great to have him on and be on the other side and on camera with us. But everyone, thanks for joining us. We hope you enjoyed the episode. Keep on learning and have a great day.
Thank you for listening to the Bank Talk podcast brought to you by Remedy Consulting. To reach out to Jesse at Members First FCU, go to membersfirst.org. Once again, membersfirst1st.org. In this holiday season of gratitude, we are especially thankful to all of our listeners and for your support of Bank Talk. Thanks again, and we'll see you in the next episode.